All right. So I got to tell you, I'm thankful for the 3 whole degrees that showed up to work today. So it is rather bitterly cold outside, but that will not stop me from going to the salon. Today is salon day and I'm excited, which is why I'm in the baseball cap. All right. So, okay, so got that done. Let's get started. First of all, a few housekeeping announcements. You know, we're coming towards the end of the year. We got 4 days left. So make sure whatever tax moves you're going to make sure you do that before December 31st, 11:59 and 59 seconds, because once that clock strikes 12, we are in January 1st and it is essentially too late. The party is over. You know, we turn back into a pumpkin and we start all over again. Okay. So make sure you do that. And coaching opens up next week. On January 2nd, the group opens up. Coaching will actually start on January 2nd, 7th. Hello, Sonia. How are you? Good morning. All right. So I think that is it. Let me, okay. I think that's all my housekeeping announcements. I messed up my microphone, so that threw me off a little bit. So, oh well, here we go. All right, welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. When you tune into my show, which airs Monday through Friday, 9 o'clock-ish, you're going to hear about topics that are important to the home business community. And so today, we're talking about a little bit about cryptocurrency. All right, we're talking about you know, one of the big issues with cryptocurrency is that when people entered the crypto market, they were really trying to not have to pay taxes on the money, okay? And which is why the IRS kind of went after the cryptocurrency market, because they were not trying to pay taxes. So now, you know, people are looking for ways to avoid paying taxes on their cryptocurrency gains. And so this is one of the ways that's, you know, that's out there now, that's slowly but surely coming to the forefront. So of course I want to be here to talk about it. All right. So let me also put the disclaimers out there. I am a tax professional. I am not an investment advisor. And so what I'm sharing with you is for educational purposes. You need to do your own research. If this is a route that you choose to take, you have to determine that it's right for you. I'm not telling you to do it. I'm not telling you to not to do it. I'm just putting the information out there so that then you can start really asking intelligent questions and making intelligent decisions about what you're going to do with your money. All right. So one of the ways that people are using to avoid capital gains tax on cryptocurrency gains is through a self-directed IRA LLC. Okay. And what this does is that, you know, within your IRA, any gains or anything like that from trades of stock, and it doesn't matter if it's long-term or short-term, it grows tax deferred, which means that you don't have to pay taxes when it happens. You pay possibly when you take a distribution later on. So you could, you know, defer taxes and possibly eliminate taxes. It just depends on if you're taking a qualified distribution or not, okay? That word qualified distribution is really the hinge on whether or not you get to completely eliminate the taxation or if it's tax deferred. Now, if your distribution is not considered a qualified distribution, it's taxed at the normal income tax rate. And this is where I really want to focus, because, you know, what I don't want you to do is to go, whoo, I don't have to pay capital gains. Let me go get this self-directed IRA LLC thing going on. Pump the brakes, because there are two things, you know, there are some conditions that have to be met. Two of those being that, you know, in order for you to withdraw penalty free or perhaps defer or eliminate taxes is, one, your account must be 5 years old. So if you're planning on accessing your cryptocurrency within 5 years, this might not be the vehicle for you. And you got to be 59 and a half. So you have to meet at least two, you know, you have to meet those requirements. There are some other things, but those are the main ones. Okay. So if you don't meet those, then this might not be the route for you. But what I want to talk about though is that trying to use the IRA to avoid the capital gains tax. And so what I really want to give you is a little bit of history, because when you come here, you're going to learn something. But I want to give you some history so you can make an intelligent decision about whether or not this is for you. So now IRAs became a really big thing back in the early 70s, like 1974 or something like that. We had at that time 25 tax brackets, if you can believe that. And the top rate at that time was 70%. So can you imagine being, that higher income earner, and 70 cents out of every dollar went to the government? Oh my gosh, that's crazy. So then, that's when IRAs became very popular, because the strategy it was that you put your money in your IRA and it's, and it grows tax deferred, so that when you are able to cash out, you're cashing out at a cheaper rate. And which that actually happened. It worked because tax brackets steadily declined until 1988. In 1988, we had 2 whole tax brackets, and the top tax bracket was 28%, okay? But then from that point on, taxes gradually started to increase again, okay? So they gradually increased, the tax brackets increased until 1994 is when we hit the top rate of 39.6%. That's where we are today, and it stayed that way until the current tax reform, which will take effect. Some things will take effect next year, where the top tax bracket will be 37%. Now, understand this too, that these new lower tax rates are due to expire at the end of December in 2025. So unless Congress does something, intervenes and makes these tax brackets permanent, we're going to return to where we currently are. Okay. So all of the things, the doubling of the standard deduction and all that stuff, we're going to go back to where we are today if Congress does nothing before December 2025. Okay. So now when you think about your retirement though, when you retire, odds are you're going to be in a higher tax bracket, because your house is paid for normally, right? Normally your house is paid for or nearly paid for. Your kids are grown. So there's not a lot of deductions and tax brackets for you to take advantage of in your retirement years. So while you're in your working years, you're in a lower tax bracket and you got all of these deductions, so you're paying lower taxes. But when you reach those retirement age, like I said, your kids are grown, they're out of college, they're off on their own if everything has worked out right, right? So that's gone. Like I said, you got your house paid for. You might be going and getting your life living in an RV, whatever you're doing in your retirement years. But the fact is that you don't really have the deductions available you have when you are younger, working, growing a family, all of those things, right? So then the question that you have to ask yourself is, will taxes continue to go down? Or can they possibly go up? And the truth is, nobody knows. So when you're talking about your, investing your IRA, using your IRA to invest in cryptocurrency to avoid capital gains, understand that, when you take those withdrawals, they're going to be at your income tax rate. Okay. Again, depending on whether or not it's a qualified distribution, and your custodian of the IRA can tell you what's considered a qualified distribution. So when you think about that, again, you have to ask yourself, am I going to be in a higher tax bracket when I retire, or am I going to be in a lower tax bracket when I retire? And you know what? Again, historically, with the exception for this, taxes have steadily increased. So the other thing that you have to consider is the fees that are involved. Every state has a fee for an LLC. An LLC is really more a state entity versus a federal entity. Okay. So there's still reporting that has to happen. You still have to pay your annual fees to maintain your LLC, and every state is different. There are some states that are as low as $80, and then there are states like Massachusetts where it's $500. So every state has their own fees for their LLC. They have their own reporting requirements for your LLC. They have their own annual fees, and so it varies by state. And no, you don't want to go and put your LLC necessarily in Nevada or Delaware, because depending on how that's registered, you could be considered a foreign agent in your state, and you got to pay foreign agent registration fees, and that's not cute either. Okay, but even still, you still have to track all of your transactions. You don't get to just go to sleep on this IRA, say, okay, I'm going to go buy some cryptocurrency and let it just sit and just, wake up in 20 years and do something with it. That's not how this works. You still have to have, your tracking information. You have to account for every dollar, and then you have people who mine for Bitcoin. Okay. That is considered if you're mining Bitcoin, that's considered a business. And even if you invest in that with your IRA, you can still generate a taxable event and have to pay income taxes, because, that's considered unrelated business taxable income. I think UBTI, I think that's it. So either way, you still have to have reporting. You still have to track. It's just, are you going to pay taxes now, or are you going to pay taxes later? And depending on what you do, again, you might wind up paying higher taxes later. Who knows? Because the truth is, we don't know what the government is going to do with taxes, right? Because if you look at over our recent history since 1974, can you imagine going from a 70% tax rate, down to, right now we have the 39.6, and next year starting 37%. That is a huge change if you were that person in 1974. But if you're that person that started in 1988 and you saw that 28% top tax rate go up to 39.6% and even 37%, you're sitting there going, whoa, taxes are going up. So you really gotta, this is something that you really have to pay attention to. And, if this is a route that you choose to go with your with investing in your cryptocurrency, I highly recommend, number one, you do your homework. Two, you get some help. And no, I am not the person. I am not the investment specialist. I'm the tax girl. So you have to, find someone that is knowledgeable in this area, and ask them these questions. Ask them about when you would be able to access your money without penalty. Ask them, when, if taxes go up, what's going to happen? Ask them all of these things so that you can make an intelligent decision about how you're going to, buy your cryptocurrency, whether you're going to invest your crypto, use your self-directed IRA LLC, or if you're just going to buy cryptocurrency for yourself and then pay your capital gains as you use it. However you're going to do that, you need to figure out what's best for you. But just know that, with your self-directed IRA LLC, that's a whole lot to say. But with that, there are still some other implications that you need to be aware of, again, so that you're making that intelligent decision and not just hearing something and going, oh my gosh, I don't have to pay taxes, I'm going to go get this, and then it doesn't work like it's supposed to for you in your mind. Okay, so that's it, you guys. I'm telling you, cryptocurrency, I don't see it going away anytime soon. Like, people are, is this just the thing? I don't see cryptocurrency going away anytime soon. However, it's not a wise thing to just blindly, go invest in things. Take some time, do some research, ask, people who specialize in these things, all of those things. Do your homework, because as people are like, okay, this is a sure thing. Not everything is a sure thing. Don't invest more than you can afford to lose. That it's just that simple. So if you can afford to lose $100, invest $100. If you can afford to lose 10 grand, go invest 10 grand, but you have to make that decision for yourself. Okay. So now that I beat that horse to death, thank you guys so much for tuning in to Home Biz Tax Talk. I really hope you got some value out of this. Again, we're here Monday through Friday, 9 o'clock-ish. And this is where we talk about tax topics that are important to the home business community. All right. You guys have a great day, and I'll see you next time. Bye.